Hi there. For those of you joining, we are just waiting and giving everyone a couple of minutes before we get started, so please bear with us. Right, great. Hi, everyone. I think we can get started. It's now 3 minutes past. But firstly, I want to say welcome to Ndovu's monthly webinar. Every single month this year, we're going to have a very educational webinar. And today's webinar is very much focused on what does 2025 hold for us in terms of savings and investments. And before we get into it, I should introduce myself. My name is Radhika Bhachu. I am the founder of the business. My experience is very much in the investment space. I have over 16 years in investments. I used to work at Deloitte as an investment consultant, and then I moved over to BlackRock, which is the world's largest asset manager. And I spent majority of my career there. And so I'm very excited to be taking you through what 2025 has in store for us. And the key takeaways for today is that I want to give you the insights on what happened in 2024, especially within the tech market and what that means for us. And then also look at what are the opportunities in 2025 and where you can then take away some key steps on how to build your portfolio for this year. And we welcome any questions. Feel free to put them in the chat, and we will have a Q&A session towards the end where we'll answer some questions. But let's get started. Oops, sorry about that. Before we get started, though, some of you may be new to us. We have been around for 3 years now, and I think it's very important for us to communicate why do we do what we do. And as a business, as a founder, our entire team is aligned to our vision. Our vision really is to drive economic empowerment across Africa, across 655 million Africans. And the way we want to do that is doing it through digital savings and investments. So historically, before, people have been excluded from formal financial markets, which for me, coming in the investment space, is a very big shock, because the way you grow money and multiply your money is by being smart about the way you invest and save. So we're really trying to democratize access to savings and investments, and we want to do it across the continent. And what that will in turn drive is economic empowerment. And a personal goal and vision for me is that in 5 years' time, I'm walking down the street and someone says, hey, because of Ndovu, I was able to send my children to school or university. And I think that's a really great way for us to really build what we're building. And that really is why we do what we do. So who we are, so essentially Ndovu is a digital savings and investment platform. And the value that we bring to you is that we make investing simple, and we are all about helping you invest responsibly. So we like to simplify the investment process, keep the transactions transparent, and make sure that you are getting what you deserve in terms of returns and how to grow your wealth. And as a result of that, we do webinars such as these, and we have an insanely well-educated relationship management team that can help you if you have any questions later. But essentially, that's who Ndovu is, and these are some of our team members that work with us. Right, so let's jump into it. 2024 was a very interesting year for the markets. It was actually a very strong year. We saw markets continue to improve and generate decent returns. And the reason was because we saw big companies actually contributing significantly to global growth. Now, in this webinar today, we're really focused around tech. And the reason being is that if you and I think about the tech sector, so the technology sector, we do not need a lot of investment expertise to understand that technology sector is going to be around for a very long time. So you don't need to be financially aware or literate, but as a normal common sense position, you can say to yourself, do I think the tech industry is going to continue to grow in the next 10 to 15 years? And the answer is yes. Because everything is moving in the space of tech. So in this particular webinar, we're going to focus a lot on what we should be holding from a tech perspective. And just to give you a recap, in 2024, the tech stocks actually had a bit of a mixed performance in 2024, with some sectors within tech seeing really exponential growth. So these are sectors such as AI, cloud computing, etc., with some tech sectors actually readjusting in terms of how they've performed. So what the market did was that the things that we see value in and we see that they will continue growing actually performed very well. But some other companies, tech companies, such as SaaS companies, which were overvalued, so they were already too ahead of in terms of market pricing, actually recovered. So that goes to show that the market is doing what it says on the tin. The goal of the market is to bring companies along that are contributing really well, and the ones who are lagging behind, it sort of it corrects their valuation. And so one of the key indices, which is the S&P 500, the S&P 500 is an index that lists the world's 500 US largest companies so that you can buy them. So these include familiar names such as Coca-Cola, Johnson & Johnson, AstraZeneca, Microsoft, Apple, Tesla, NVIDIA. And there's 500 of these companies that are listed within the S&P 500 index. And this is really important to know, because if you are investing in the S&P 500, that means you're owning pieces of the 500 companies in the world, in the US, that make our economy tick. So as you can see, in 2024, there was a significant proportion of tech companies that made up the 500 companies, and they saw significant gains, which were fueled by the news on AI and definitely cloud computing. And majority of the tech companies, such as Apple, Amazon, Tesla, continued to contribute very well to 2024. And one of the key things that really drove 2024 to be a top year was obviously AI companies such as NVIDIA. I'm sure you've all heard of them, especially with the recent sell-off that happened a couple of days ago on Monday. But traditional companies such as Microsoft and Google continue to lead charge. And what tells us about 2024 and the insights and the trends is that tech is not going anywhere. It's somewhere. It's actually going in. It's actually going to grow in the future, and I think it's very important for us to have these companies in our portfolios. And that's the value that Ndovu brings to you, is that we allow you to have access to such of these big companies that we use on a day-to-day basis. So it's very exciting. So it was a very exciting year last year. Now, the key thing is that, we're all setting our 2025 year goals. We also need to understand where the market is going to take us in 2025 and what's really going to happen. Now, overall, I think it's very difficult to predict what can happen in a year. And so these projections are based on things that we can control and the things that we know about. The reason I say that is in 2020, no one could have predicted COVID and the pandemic. So again, a lot of research that goes into trying to set what we think 2025 is going to be like. Can be some unexpected factors that no one can call because we just don't have that type of information. But as we enter the 2025 year, I believe this year is going to be a very good year on very different levels, not just for savings and investments, but this year will again be focused and will be driven by the groundbreaking technology that's evolving. With the new administration with Trump, that will also keep the market very interesting. My personal opinion is that Trump is very good for business, but sometimes he does say or do silly things that makes the market go up and down. And my one advice to everybody investing in 2025 is don't panic. Ndovu is designed to be investing for the long term. And so don't 2025 or any type of volatility that happens there scare you. The idea is that we are investing for the long term. So if the Trump administration says something or does something that changes the way the stock market performs, don't panic. The goal is to remain invested. So I think the three key drivers for 2025 and how markets do will be based on innovation. So what are the new innovative things companies are doing? Sustainability, as you know, sustainability has been a very key topic across a lot of companies on bringing in carbon credits, making sure that we're being sustainable for the environment, making sure that our businesses are conducting operations in sustainable ways. And then lastly is digital transformation, which just means that you're automating and using technology to really transform different sectors in the industry. For example, Ndovu is taking part in digital transformation by being able to provide access to local and global markets through an app. So that's essentially what digital transformation is. So what I would like to do now is just break down the major trends that I think will be shaping 2025. Again, this information is based on lots of research on what other asset managers think out there, but really there's 5 industries that really come to mind. One of the biggest one is AI and machine learning. Of course, NVIDIA has been in the news in 2024 a lot, but more recently, a Chinese company called DeepSeek, which you're very familiar with if you follow social media channels, etc., also made this trend quite apparent. And we are now seeing lots and lots of companies use AI and machine learning to improve processes internally, which overall will improve efficiency. And this is why this sector is definitely going to contribute to the growth in 2025. The second sector is semiconductors and the chip industry. So anything smart, anything AI, anything that requires machine learning needs semiconductors. So this is the raw material that goes into anything smart, like a smart fridge, smart car, an iPhone, a laptop. And essentially what this will do is increase the demand of the raw material, and hence semiconductor will contribute, and it falls nicely into the first sector. We all love talking about crypto, but I think a sector that will do really well is Web3 and blockchain. Blockchain is the infrastructure on which crypto is run. We don't recommend, it's nice to hold crypto, but hold it as a small proportion of your allocation. But really the application of blockchain, which is the infrastructure behind it, is very interesting. It's going to change how we transact in money, how we game, and how we use these certain infrastructures in manufacturing, etc. So it's a very exciting sector to look into, and yeah, Ndovu has some funds on that, and I'll talk about it a bit later. And essentially green tech and sustainability is all about being renewable, so green, clean energy, carbon reduction, and I think this sector will continue to grow because we have a global responsibility to be more green in the way we do things. And then last on cybersecurity, growth is increasingly important because innovation is driving threats to our normal day-to-day. As you all know, we have our life on the internet now. Our passwords, everything is done through an app. So cybersecurity is going to see significant growth. And I think those are the main 5 trends that will continue to outperform the market in 2025. And we can expect a lot of growth and investment within these 5 sectors. And this is why Ndovu is here to help you get access to some of these sectors. So before I move on, just as a quick tip, if you're taking notes, if you're looking at the AI machine learning piece, I would recommend looking at some of the funds on Ndovu. For the semiconductor, we have the microchip fund. For the blockchain, we have the blockchain, the Kings of Blockchain fund. And we will be adding a few more funds based on this market outlook, especially in the renewable space and cybersecurity. But one last thing for 2025, even though the market outlook looks high, the Trump administration is very positive for businesses. Just the nature of Trump himself will say and do silly things that will have an impact on the markets. So I would recommend that when you see the market go up and down, don't panic, because remember, investing is for the long term. And the only advice I can give you here is that the best thing you can do when markets go down is do nothing. the second best thing you can do when markets go down is invest small. So a personal example for myself is when Nvidia lost 20% of its value early on Monday, I actually went and put more money in because I still believe Nvidia is going to be around for a very long time. And you don't need a lot of science. And I know there's competition coming into the market, but there will always be competition coming in the market. And this is why these companies are funded to innovate and be ahead of the pack. So it was my decision to add a little bit more to Nvidia. Great. So this is all really interesting stuff. You've learned a little bit about what we think the market is going to do in 2025. But the real thing you're here to learn today is like, how do I create a portfolio in 2025 that's going to be profitable? Now, my years of experience have shown me a couple of things. If you are earning anywhere above 12% on the dollar, that is a good return. Historically, last year, the market did really well. The average return was about 36%. That is a really good year, but we're not going to have really, really good years like that forever. But it is likely that this year is also a very strong year, as long as things go the way they're meant to go. But my key takeaway here is that when you're building an investment portfolio, you would like to, a good return is defined by earning anything above 12%. The average return for most of us, so we have over 100,000 users on our platform now. And last year, the average return was 17% on the dollar. That's a very, very good positive result. But we also had a lot of innovation and growth happening. But the key thing I want you to go away is that if your money is growing every year by 12% on the dollar, that is a win. And some years will have bigger wins, which is like 2024. So how do we create a portfolio? I always believe that I don't want to come here and just tell you what Ndovu does. I want to take you back to basics. And the key to investing is keeping it simple. I'm going to say that again. The key to investing is keeping it simple. So there's a lot of research shows that if you go back 100 years in investing, if you invested in the way that Ndovu invests, which is investing for the long term and doing it responsibly through funds, those types of investors over the 100-year period have actually done better than those investors who went in and stock picked and said, I'm going to go buy Apple now, I'm going to buy a share of Tesla, I'm going to buy a share of Amazon. And the reason being is that when you do this active picking, the reality is that sometimes you have more winners and some losers. And on the other hand, you have more losers than winners. So what Ndovu is trying to do here, we're driving economic empowerment, which means that we want you to build your wealth responsibly. So you're not going to see 90% growth in your portfolio. And we're okay with that. But the goal for us as a company is to deliver you more than 12% in return. And so when you have that in mind and you know, okay, on average, I'd like my money to grow 12% on the dollar a year on year, and anything above that is a win, then actually this strategy of keeping it simple and responsible is the best way to go about it. So how would I do that? So the first thing is that we want to break down our portfolio into two buckets. One bucket is called capital preservation, and the second bucket is called growth. Capital preservation simply means that the hard-earned money I have earned, I take it and I invest it in a product so it can generate enough return to outpace inflation, and so that it continues to grow and it doesn't lose value. We have various funds on Ndovu that help with capital preservation. Typically, when you're building your portfolio, you want to make sure that you have about 30% into the capital preservation bucket. Especially if you're young, you can even reduce that to 20%. And if you're older, more closer to your 50s, I would say you would probably want to put that towards 40% because you want to be a bit more cautious because you're getting older and you're going to be retiring soon. So you want to make sure that your money is protected. But for young individuals like Gen Zs and myself, I'm not a Gen Z, but myself, I would recommend putting about 30% in capital preservation. We want our money to be protected, and we are expecting in returns that outpace inflation, but we're not expecting crazy returns. And this type of investing is typically used to build your emergency fund. So should anything go wrong, you're able to rely on this portfolio to take money out. Sorry, just 1 minute. Excuse me. So what I would hold in my capital preservation bucket would be the Ndovu Money Market Fund, which on average gives you any from 12 to 16% per annum. You could hold some money in a bank account. This is for your day-to-day monthly expenses, etc. And then lastly, I would hold money in a gold fund. Gold seemed to do really well in 2024. The reason is because people were with the US elections, people were unsure how that would go and what that meant for the economy. So a lot of money flew into gold, and gold is always a great asset to hold to diversify your portfolio. And I'll talk a little bit about it in the third bucket. But essentially, for capital preservation, for you to build an emergency fund is to have at least 3 months of runway. Should anything happen to you, you lose your job, someone falls ill, that you can pull out. And I think the Ndovu Money Market Fund, Gold Fund, is a very great way to do that. Now, the really exciting stuff is on the growth side. So if we're young and even if you're in your 50s, you want to see some of your portfolio have a bit more growth. And growth really comes from investing in sectors that you think will be around to 10 to 15 years. And the beauty about not holding your money in a bank account is when you invest it responsibly, your money grows in its sleep. So that means you don't have to go to work and work that much harder. You're now working smarter because you are investing your hard-earned money responsibly in sectors that we can confidently say will grow with time. And the goal here is actually to keep your journey simple. And the way I would always recommend that is to hold global index funds. And if you were to look at your investment portfolio for your stocks and shares, I would say you hold 30% in capital preservation and 70% in global funds. Again, if you're in your 50s or 60s and coming to retire, I would recommend changing that the 70% allocation to global funds to something around 40, just because now that we want to make sure we're taking a little bit less risk because we won't be working for that much longer. So when you're looking to build your growth portfolio, there's a simple question you can ask yourself. Which sectors do I think will see significant growth in 10 to 15 years? You don't really need to be a financial expert, but if you can answer that, it's most likely to be things around tech, AI, raw materials. And the beauty about the stock market is that I see the stock market as human progress. So if we believe that companies continue manufacturing, distributing, innovating, and we believe that because of the nature of how the internet has changed things and people are earning more money now, we know that humans will continue consuming. And the stock market is simply a simple diagram that shows you how the economy has evolved over time and how we have actually grown as a whole human race in actually manufacturing and growing. And so these companies will continue innovating and growing, and us will continue consuming, in the result leading to an increase in prices of companies that are doing well. So it's very important to hold around 70% of your wealth in the growth sector because you don't want to leave money on the table. And the beauty about what Ndovu does is that we allow you to pick a balanced portfolio that allows you to do diversification. So like I mentioned, diversification simply means that not putting all your eggs in one basket. There's been several times when I speak to customers who say, yeah, I have 100% of my wealth in crypto. And that gives me the shivers because I feel that is the worst investment strategy you can have unless you have an all or nothing type of mindset. The idea is that you want to put your eggs in different baskets so that in an event when things are not going well in one basket, you have another basket to rely on. And that, simply put, is known as diversification. And what I've explained to you in terms of capital preservation assets versus growth assets, that's how you diversify your portfolio. So let's just say on an occasion, equity funds are not doing well. So you've invested in the S&P 500, the market has come down, but you also have gold. Gold will be going up and it diversifies the risk that you're having. So it's very important to build a portfolio in a balanced way where you can achieve diversification. Right, so for those of you who don't really know what Ndovu does, we are the first fintech in East Africa to launch our very own money market fund. And again, this falls into your capital preservation bucket, and I think it's a very important part of your strategy. We were one of the first fintechs to give you access to global markets. There are a few more players now, and essentially we do that in a responsible way, and we give you access to exchange traded funds, which simply is a basket of companies. And we also give you access to some fractional shares with an idea of holding them for the long term. And then lastly, we do a lot of work in doing financial advisory work where we help you decide how to invest, what are your financial goals, and help you achieve them. So if you're interested in that, just reach out to us on our channels. They'll be communicated later, but we're able to give you a one-on-one session to really help you break down a financial plan. Right, so I've told you a bit about Ndovu. I've told you how to invest, but for 2025, how would I set the strategy? So please ignore the return numbers here. These are what they were historically done. Return changes on a daily basis. So just ignore the return numbers there. But essentially what I'm telling you here is that in 2025, if you are investing, you need to be holding the technology sector. And this technology fund has about 300 companies that are listed on the US exchange that all contribute to these types of to tech. And so these are companies such as Microsoft, MasterCard, PayPal, and the likes. And when you invest in the technology fund, you're buying pieces of those 300 companies, and you are then benefiting from their growth in their business. So I think the techie is a very, very good fund to hold. And in that, I would put 25% of my allocation in there. So remember, we said that your capital preservation bucket has 30%. So of your 70%, I would put 25% into the techie. The second fund I would invest in, we all know that AI is all the craze right now. And we want to be smart about how we invest. So we're going to invest in the raw material, i.e. semiconductors, that contribute to how AI is going to achieve. So the microchip fund is a very exciting fund. It holds companies such as NVIDIA, AMD, and a bunch of other manufacturing sector, semiconductor type companies. And again, when you invest in the microchip fund, you're owning pieces of those companies. And as the consumption of phones goes up or laptops go up or use of AI goes up, these companies will do really well. And that's why it's really smart to have this particular fund in your portfolio. And again, I would allocate 25% of my 70% in there. And then lastly, the blue chip fund is the S&P 500. You get access to all the 500 companies listed on the US exchange. And this is a really great way to diversify, because now you're no longer just focusing on tech. You're actually looking at consumer good products such as Johnson & Johnson. You're looking at healthcare such as AstraZeneca and Pfizer. You're looking at financial companies such as Goldman Sachs and Bank of America, etc. So it gives you a nice balanced portfolio. And again, when you put your money into the blue chip fund, you get access to small pieces of those 500 companies. And that is a great way to diversify your portfolio, because as I said, 2025 is going to be very good for the tech sector. So we'll have some extra exposure to tech through the techie. We know AI is going to be a great, great sector as well. So we've got extra exposure to semiconductors that help AI. So that's the microchip fund. And then on top of that, we're diversifying our risk by holding something that's a bit more broad, but also gives you a decent amount of return. So from your 70% of your portfolio, I would invest 20% in the blue chip fund. So to summarize, let's say that somebody today is investing 100,000 shillings. I would invest 25,000 shillings into the techie, 25,000 shillings into the microchip fund, and the remaining 20% that makes up your growth portfolio will go into blue chip. And then if you don't already have an emergency fund, I would recommend holding of that 30%, 15% in the money market fund with Ndovu, and 15% in the gold fund. Yes, so this leads me on to the money market fund. Again, Ndovu has its very own money market fund. The average return last year was 15.5%, and this year we're expecting it to be 13.5%. And for those of you who don't know, the money market fund returns are very much based on government securities, fixed deposits, and papers. And I read the news this morning. Kenya has reduced its the CBK, Central Bank of Kenya, reduced the interest rate yesterday. So that means that they are now offering lower returns in the market, and that's why the return for our money market fund has come down to about 13%. But we're competitive with all the other money markets funds that are out there. And and of course, I mentioned I would also hold 15% in the gold fund. Now, the beauty about Ndovu is that we also add an additional benefit, which is being able to diversify your portfolio based on currency. As you know, over the last 5 years, the Kenyan shilling has depreciated, so lost value against the dollar, and Kenyans are global citizens, so we are purchasing phones, laptops, clothes, holidays, all on the dollar, but our currency is getting weaker. So not only does Ndovu give you access to both local and global investments, we're also helping you diversify your currency risk, which means that you are actually benefiting. So when you earn in dollars and convert back, it is likely that the dollar has strengthened, so you get more money back for your investments. Right, why Ndovu? I think the biggest why for me in Ndovu is that you can have your it's an easily usable platform. That's the feedback our customers have given us. It's easy to use. We're competitive on pricing. We give you access to both local and global. And there's no jargon, and actually you can see everything on the app, which I think is super helpful. You know where your money is, you know where it's growing. And my advice to everybody is that get started with a small amount of money. You start becoming familiar with how Ndovu works. And there onwards, I don't need to tell you yourself, but you'll be coming back because it's a responsible way of investing. Now, everyone does ask us several questions around, is Ndovu regulated? How can I make sure my money is kept safely? And really, this is how Ndovu brings value add to you. We give you access to both global and local. So we allow you to actually diversify your portfolio, but we also make it really simple because in the investment universe, there's 6,000 funds and you don't even know what to hold. So myself, including our investment committee, have gone out there and hand-selected funds so that you can pick the right technology fund in the tech sector. You can pick the right semiconductor fund in the semiconductor sector. And that really is the value that we bring to you. Secondly, when we were setting out this company and building it, we wanted to make sure we were regulated. And so Ndovu is regulated by the Capital Markets Authority in Kenya. As a fund manager, we're regulated in Rwanda and Uganda now. And we're also regulated in the States. We under the SEC and the FINRA. And essentially what this means is that if a company is regulated, the way we manage your money is done in the right way. So we use a custody bank to hold your cash that you give us, but also hold the assets that you give us. And what that means is that your assets are being taken care in custody. So there's a custodian. And should anything happen to the operations of Ndovu, your money and your assets are separate from our operations, which means should anything happen to Ndovu, you're ring-fenced and your assets will be kept safe, and the regulators will get in touch with you because they have all your details to say, hey, listen, in this event, and not that it's going to happen, but in this event, Ndovu is under, what would you like to do with your money? And I think that's the biggest question you need to ask any investment provider that you work with. Where do you hold my money? Who is your custodian bank? And are you regulated? And then the last thing I think that really sets us apart is that every decision we make is for you to invest your money responsibly. We're not the platform that's going to give you 120% return. I don't want to be that platform. I think those type of investments are risky. We want to allow you to invest responsibly, and we try and achieve that by being transparent, making it easy to invest, and also having a financial advisor that can guide you through your journey, but also most importantly, giving you diversification by giving you both local and global stocks. This is what our customers say about us. We now have over 100,000 users, and we are very proud of that. It has been a journey, to say the least, but we're growing, and it's a very exciting space to be in. And so, lastly, just to get started, I think it's very important for you to download the app today, play around with it. At the moment, if you download the app, we give you a free financial advisory session with one of our very credited relationship managers. They'll help you work through the basics, which is budgeting, looking at your expenses, defining your financial goals, and then helping you invest so you can achieve them. But yeah, I've spoken a lot, and I think now we can hand it over and we can we can take some questions. Feel free to drop your questions in the chat, and I'll just give everybody about a couple of minutes to put their questions in there, and I'll just go on mute for now. Thank you.